Hello students, in this video we will see the solution of question number 1. Okay, so here we are. CCT Limited with a nominal capital of 1 lakh equity shares of rupees 10 each. So this sentence, it means here that this nominal capital, so by nominal capital we mean the authorized capital of a company. Okay, so by authorized capital we mean the amount of capital that has been already registered in the office of registrar. Okay, so this is the maximum limit uh, of capital of company. Okay, so this 1 lakh equity shares was divided into uh, shares of rupees 10 each. Okay, so out of which 60,000 shares were issued to the public. So whatever the amount of shares that have been issued to the public, we will focus only on those numbers. Okay, we will not focus in the amount that is 1 lakh, but we will focus in the amount of 60,000 shares. Okay, and these shares are to be purchased as per the installment, that is on application, on allotment, and on first and final call. The money to be paid are rupees 4 and rupees 2 respectively. So there are two ways of selling a share, okay, or purchasing a share, that is by means of lump sum, okay, or installment. So whenever we purchase the share in lump sum, the entire money is received on time of application. Okay, so if the shares here in this particular question, the total nominal amount or the face value of each share is rupees 10, so this entire money rupees 10 will be received on time of application. But when the shares are to be sold in terms of installment, the amounts are now segregated into various categories. Okay, so I I already have shown you the flow of journal entries in terms of your issue of shares. So let me take you to that particular journal. So out there I have shown you what are the things. So first of all we have share application and then share allotment. Okay, and then we have share first call and then share final call. But here in this question number 1, this first call and final call, they have been combined together. Okay, so it may be the case. Okay, so share first call and final call may be combined or may be separated. Okay, depending upon the situations. Anyway, so let us start with our solutions. Okay, so I will be using this highlighter to show you. Okay, because I don't have anything here, so I'll be using this particular highlighter to explain that we have already finished this particular journal entry. Okay, so the first entry when we receive the amount of money on application will be bank account debit to share application. Okay, so first entry will be bank account debit to share application. Uh, Narration is very much important. You have to write the narration. Okay, each and every single narration is very much important because it is the part of your solution. So you have to write narration. So 60,000 shares, 4 rupees for each. So the amount will be 2,40,000. So once we receive the amount, okay, of this share application, this share application money should be transferred to equity share capital account. So what is the philosophy? What is the reason behind this particular entry? The first entry that we can see here, bank account debit to share application. So whenever we sell the number of shares to the public, we receive the amount of money from public. Okay, so bank. Okay, so the purchase and sale of shares are done through bank only. Okay, so you must have known and heard about uh, an account called demat account. Okay, which is specifically used for uh, trading in shares, okay, and stocks. So the first entry will be that bank account debit to share application, because debit what comes in credit, what goes out. So bank is a real account, so it follows the golden rule. Okay, and after that, this share application will be transferred to equity share capital account. Okay, because the money that has been received should be transferred to equity share capital. Okay, and after that, when the shares will be now to be allotted. Okay, now after this application money has been transferred to equity share capital account, the number of shares now to be allotted. So let me use the highlighter. Where is that? So we have finished this entry as well as this entry. Okay, so now we are on this share allotment entry. So the third entry will be share allotment account debit to equity share capital account. Here on allotment, rupees 4 is to be paid. So on 60,000 shares into rupees 4, it will be 2,40,000. So the amount of money, when we receive the amount of money, the entry will be bank account debit to share allotment account. Okay, just like in case of the application money that we had received here. So the same will be in case of receival of this allotment money also. Okay, so bank account debit to share allotment account. So we have passed 4 entries. Now similarly, this share first and final call money will be due. Okay, so this entry will be share first and final call account debit to equity share capital account. Okay, so again we have passed this particular entry. Okay, so it is rupees 2 per share. Okay, so the amount will be 1,20,000. Okay, so finally we receive the amount of money, that is 1,20,000. So see, this particular question is very simple. Okay, in which the shares are issued at par. So at par, we know already that by issue of shares at par, we mean the this thing, that is nominal value is equals to market value. Okay, let me show you the PPT. So this is the case. At par means at nominal value. Okay, that is the full face value of the um, share. Okay, and this particular question, it is the case of your full subscription. Okay, 60,000 shares were applied. 60,000 shares were issued and 60,000 shares were applied. Okay, by the public. So this is the case of issue at par, and this is again the case of your full subscription.